Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Thursday morning pre-market webcast. Okay, daily chart of the ES, and what you see here is, we've just made this really strong move up off of 38, and we pushed as high as 90.5 yesterday. Globex high is at 90, and we're pushing up above the upper Bollinger Band, and you're starting to see the band. Let me zoom in one. You're starting to see the band curl up. So my primary concern right now, especially with this little low getting bought and we're trading up near highs, is that we're potentially going to ride the Bollinger Band for a couple of days. I talked about this in my subscriber Q&A last night. That's my primary concern. And we get back to that general rule that I have on daily charts, which is that you're not going to see any real rollover until the bears are able to breach the prior day low, which in this case is that 1677 that has been so difficult. It was difficult yesterday, and it was difficult the day before. Difficult from the standpoint of the bears. Very nice buying opportunities with respect to the bulls. We were able to get long in the room yesterday at 79. It was a nice little trade for the majority of the day. So that's the first line in the sand if you're a bear, and it's the first line that you want to defend if you're a bull. After that, you get back into the yellow line here, the 1670 area that's been important now since back in July. Those are two very heavy areas that the bears would have to go through. That being said, I think we're due for a little bit of a pullback, but my thought is, in looking at the chart, is it's going to be a pullback probably to the 1670 area, maybe a little bit of an overshoot. I am very skeptical about the bears' ability to get back below the middle band. If they're not able to do that, then the bulls will continue to control the tape, and we will see a run at the 1705 highs. And this is very similar to what we saw when we were trading back here at 1685. We went down, we made the 38% retracement, and we came back up to the highs, and we paused a little bit here. And, I would say, well, it's one of three things. Either we're going to make a little bit of a lower high, we're going to make a double top, or we're going to push through. So that's just a preview of coming attractions of what to expect over the next couple of weeks. We may get into that conversation. If the bulls try to go there from here, I see very little chance of them being able to make new highs, because I think you'll see some real exhaustion up at that area. So if you're a bull, you want to pull back at this point. You've done 50 off the lows. You want to pull back. People need to reload. The market's going to continue to get tired. So that's generally where we are with the tape. With respect to the pivots, you've got double pivots down at 1668, 1669. So it's consolidating down in that 70 area. The 3-day pivot is sitting right at 1677.5, so right on yesterday's lows. And in between there, you've got the 45-day pivot. So I'm not running out screaming, we need to get long-term short to my people, because we are only 17 handles from peak price down to that 45-day pivot. We are not at extreme levels at all. We're not at extreme levels. We're not at new highs. We are punching through the upper Bollinger Band, and that may give us a little bit of a retreat. But until we break through 77, I'm not going to get very interested on the short side, with the exception of intraday trades, because you have the risk of going down to, say, the daily pivot today, which is 86, going down, making a low, and then having the market reach back for new highs. That's what upper Bollinger Band or any kind of Bollinger Band ride looks like, whether it's an upper band or a lower band. You make a move in the opposite direction of the band. You make a move in the opposite direction of the band, and then price reaches for that band. And it continues to do that each day, and you ride, and basically, then it puts every short out there on the pain train. Or if you're riding the lower band, it's the opposite. You put all the longs on the pain train. So that is the risk if you're just diving in short. If you do dive in short on a multi-day basis, you can do so, but you better start small. Okay, everybody have a fantastic day. Mike Vacchi, PrincetonTrader.com. Follow me on Twitter at Princeton Trader. Check out the website. Come check out the chat room. We've got we got a bunch of people in there right now doing the trials. We're getting some great feedback via email, converting a lot of subscribers. It's just it's an actionable, fun place to trade all day. And I'm really thrilled at some of the responses that we're getting from the trial members. We did a trial member Q&A last night that discussed a lot of terminology and things like that. So if you come on in and take a trial, we can send that to you, get you up to speed, get you started off on the right foot. And I will be back tomorrow morning with another webcast. Don't forget to sign up for the webinar on September 18th on swing trading. Should be a good one. Take care. Be back tomorrow morning. Trade 'em well.